Welcome to the weekly market wrap-up. I'm Hannah Bernard. Thursday saw the first drop in stocks in 5 days as traders refrained from making any big bets ahead of the monthly jobs report, which comes out later today. Will a positive report get traders off the bench next week? Let's get to it. U.S. stocks stalled on Thursday. The Dow Jones Industrial Average stood still at 16,572, closing down just half a point. The S&P 500 also moved little, down 2.13 points to close at 1,888. Finally, the NASDAQ took a bigger hit, losing nearly 1% in value to close at 4,237. Turning now to Canadian markets, Canadian stocks also lost ground Thursday after posting gains all week. On Thursday, the TSX fell 56.90 points to close at 14,402, and the Toronto Venture Exchange, things were much the same with a 4.33 loss to close at 1,001. So economic news was mixed this week. The U.S. trade deficit climbed to the highest level in 5 months in February as demand for American exports fell while imports increased slightly. The number of Americans seeking U.S. unemployment benefits rose last week by 16,000 to be exact, bringing the seasonally adjusted total to 326,000. But the increase remains close to pre-recession levels, suggesting hiring stability. And of course, the jobs report comes out later today, and economists expect it will show strong job growth last month, more than any other month since last November. Analysts say many Americans stayed home because of cold and stormy weather between December and February, and they went back to work in March. Now over to winners and losers and our picks for the week. The winner for this week is Kellogg Company, ticker symbol K. Kellogg shares jumped up as much as 6.6% in its biggest gains since April 30th, 2009. The stock has risen 2.6% this year, and volume is more than triple the 3-month average. The maker of breakfast cereals, Pop-Tarts, and other food has been riding a wave of good news, including a just-announced partnership with Major League Baseball and legendary player Cal Ripken Jr. The loser this week is FEYE Incorporated, ticker symbol FEYE. FEYE shares dropped over 10% this week as the virtual security provider received a caution rating from a study by NSS Labs, an information security research and advisory firm. The study revealed reliability and stability issues in FEYE's malware protection system. FEYE has invented a virtual machine-based security platform that provides real-time threat protection to enterprises and governments worldwide against the next generation of cyber attacks. Well, those are our winners and losers for this week, and now it's time to check in on the gains you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. Starting off on Tuesday is Alcoa with an EPS estimate of 4 cents compared to 11 cents in the prior year quarter. Last week, Alcoa announced a $40 million investment in its Brazil rolling mill to increase production of specialty foils for aseptic and flexible packages. Next up on Wednesday is Bed Bath & Beyond with an EPS estimate of $1.60 compared to $1.68 in the prior year quarter. And finally on Friday is JP Morgan Chase with an EPS estimate of $1.44 compared to $1.59 in the prior year quarter. Now checking in on Canadian stocks to watch next week. Starting off on Wednesday is Dollarama Inc. with an EPS estimate of $1.13 compared to $1.06 in the prior year quarter. Then on Thursday is CRIS Entertainment Incorporated with an EPS estimate of 34 cents compared to 29 cents in the prior year quarter. And finally on Thursday is Bauer Performance Sports Ltd. with an EPS forecast for a loss of 12 cents compared to a loss of 11 cents in the prior year quarter. Bauer has been on the acquisition trail of late, picking up Easton Bell sports baseball and softball business for $330 million US. That's nothing to cry over, and as Tom Hanks reminded us many years ago, there is no crying in baseball. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News and BayStreet.ca, I'm Hannah Bernard.